Hi everyone! Today we are going to show you how to trade in the spot market in Forex with 4 currency pairs. We used a MetaTrader 4 with a demo account. The definition of the spot market according to Investopedia.com is where financial instruments such as commodities, currencies, and securities are traded for immediate delivery. Delivery is the exchange of cash for the financial instrument. Today we chose the United States dollar against the Japanese yen, which you can see in the upper left corner, the Great Britain pound against the US dollar in the upper right corner, the euro against the US dollar in the bottom left corner, and the New Zealand dollar against the US dollar in the bottom right corner. Let's see how we can trade with our first currency pair. When you right-click on the screen, you have to select a new order. After that, you have to give details such as when you want to buy, the volume, and the stop loss or take profit, which means the program buys or sells automatically without your interference at a set amount. Let's look at our second currency pair, which is the Great Britain pound against the US dollar. We set a trend line to see the tendencies in the exchange rate. You can see the trend line in red. Since the trend line shows an increase for the day, we hope that it continues to increase, so we will place a buy. We take a profit at 1.27, which means that the program would sell automatically if the price reaches 1.27. This price means that you can buy 1 Great Britain pound for 1.27 US dollars. Now let's look at the euro and the US dollar. Trading the Euro-USD currency pair is also known as trading the euro. The Euro-USD pair has become the most widely traded pair in the world because it represents a combination of the two of the biggest economies in the world. Since there is a fluctuation in the trade of the currency pair, but there is an overall increase, we expect it to be followed by a decrease. We place a sell at 1.10354, which means that we think the price will fall down. We place this bet with a volume of 0.01, which translates to 1,000 euros in real life. Now let's look at our currency pair at the bottom right corner, which is the US dollar against the Russian ruble. At first this was our choice of currency pair, but we realized that the market is closed. We will show you how this program indicates a closed market. As you can see, there are several gaps in this graph. The gaps may indicate times in which there was a big increase or decrease in the price, or a fluctuation when the market was closed and then reopened. If you can catch a gap like this, you can either win or lose a lot of money. Now we will try to set a stop loss in order to minimize our losses, but the program indicates a closed market when we clicked on sell, so making an order is not possible at this time. We closed the order tab and deleted the USD Russian ruble pair and tried another one. We selected a new pair, which was the US dollar and the Chinese yuan. When we opened the graph, we saw that this market is also closed. The Forex market is always open from 8 a.m. to 4 p.m. at the local time of the traded currency. We tried to look for another currency pair where the market was open and was not already on our list, and we found the New Zealand dollar and the US dollar currency pair. When you open a new graph, you can see if the market is open by looking at the y-axis. If it is moving, it means that the market is open. We looked at the market and we made a buy order. If you look at the arrows of your graphs, you can see what you bet on. We went back 2 days later to check on our results. As you can see, in 3 out of 4 bets we lost, but we almost hit the take profit limit in the Great Britain pound USD pair. In this graph, you can see the take profit line near the top indicated in a red dashed line. One of the peaks at 7 a.m. Hungarian time almost reached this take profit. In the Euro USD graph, you can see our bet indicated with a small red arrow. And since we bet for the price going down, we were able to make €2.92 profit on this currency pair. Overall, we lost €9.22. We hope this was helpful introduction for trading in the Forex market.